Hi, good morning everyone. It's me Jay. I'm back. This is part 2 video from the last episode. Like last week we have been talking about the basic terminologies of forex trading, how to understand the basic things like support, resistance, and how to draw trend lines. We have seen those things, and it's super easy if you have an age, if you have knowledge how to do those, how to draw support, how to draw resistance, how to draw trend line. And if you follow those rules, market always respects those. I know it's not always 100% perfect. No one is 100% sure what the market is going to do, but you can react with the market, you can go with the market. If market shows you something that you know, if you take that opportunity, you make money. So here in forex trading, the thing that you need to focus on is not money. The first thing is not money. I mean, if you are here for money, you will be emotionally haunted. The interest for money will be haunting you every time you take a position. Focus on your passion, focus on your interest. Like if you enjoy trading forex, if you enjoy spending time drawing trend lines, support and resistance, yeah, that's the passion, that's the thing. Catch on that. But if you are here only to make money, I mean, I know everyone is here to make money. We want to make money. Money is important, but the basic thing should not be it. Focus on the process. So today I will show you some basic things like uh, the strategy that I follow every time. I have traded currencies before, like not right now. I'm not trading currencies, but before few months, I've been trading currencies. Now I'm trading boom and crash and also cryptocurrencies. So today I'll show you that the strategy that I use to trade cryptocurrencies. This same strategy works on boom and crash, cryptocurrency and stock market. Everywhere it works, so you don't have to worry if the currencies here are different. First I'll show you the chart of Bitcoin. You all know what Bitcoin is. So it's the very first coin, electronic or digital money, the first one. So we see Bitcoin now. After Bitcoin I'll show you few coins, but the strategies, remember the strategies here I'm going to show, it's everything same. You can use, you can apply it on boom and crash, volatility and everywhere, but you have to focus, like you need to catch something from this. It's very simple. So now let's see it. We have a few steps. The first step is as always, cleaning the chart. Clean everything, clean the indicators, clean the drawings that you drew before days or months, so that you can see what's happening in the market. So after cleaning the chart, as you know, market has three phases, right? So market is either consolidating like this, up and down, up and down, or market is on uptrend like this with uptrend, and third one, market is like this, going down, creating lower lows and lower highs. That's called downtrend. So here this is called kangaroo or consolidation. Here this one is uptrend, and here this one is downtrend. So market is always on this one, either of this, either consolidating, uptrend or downtrend. Most of the time we don't trade consolidating markets. Actually in boom and crash it's okay, you can trade consolidating market, you can take advantage, but in cryptocurrencies, currencies and stock markets, often no one is trading consolidating markets because it has no momentum. Let's say you buy at the bottom line or at the support, you're not sure, the market may break downside, you don't know which side the market momentum is, like you may end up losing your money. So everyone waits for breakout of the market. So we trade uptrend and downtrend in currencies, stock and cryptocurrencies, but boom and crash it's okay, you can trade consolidating market. The reason is, since boom and crash is an algorithm You're trading against software, right? Behind boom and crash there is a software. You are not trading against traders. If you come to currencies or stock market, you are trading against the company or traders or hedging institutes, right? So a boom and crash, you are trading against the software or algorithm. So that means it doesn't matter if the market is consolidating, because there is no one which is like focusing on this thing. But if you go to currencies or either another market, people are focusing only on uptrend and downtrend. So that means if you trade the consolidating market, you may end up losing your money. So after identifying this market, if the market is either consolidating uptrend or downtrend, the next step will be drawing confluence areas. So let's say the market is like this. Market doesn't go up straight. There is always correction. Market goes up like this, corrects itself. Goes up like this, corrects itself. So that means it's creating higher highs and higher lows. So in this case, the first thing you have to know is identify these peak points, the points where market has reversed, because those points are very crucial. Here at this point there is nothing to grab, there is nothing to take on, because the market was going straight up, so you cannot decide something at the midway, right? But at this point you have some solid reason, which is the market reversed back. So you have a reason here, market reversal, right? So, and again another market reversal. Here also we have reversal, like this. All these points are very crucial, so put your eyes on them, spot these points. So these points are crucial. After this, the next step is okay, I think you know what these points are. The above points above the market, they are highs. These points, they are called highs, and these points, the points which are below the market, they are called lows. And consecutively, if you want to call them, this one is high, the first one, then the next one is higher high. The reason we call this higher high is this high is higher than this point, right? So if you draw horizontal line, the price, let's say the price of this high, sorry, let me clean the chart, or I'll use another area. Market is like this, creating higher highs and higher lows. So we have the first high here, right? So if we draw equivalent price for the first high, let's say this price is $10. Let's say this is a Tesla stock. So we have a $10 at the first high. Then market broke this $10 point and went up to this level. Let's say this level is $20. So after reaching $20, the stock market reversed back to the 10 level. So this high is $20 level and this high is $10 level. That means the second high, this one is higher than the first one because it's $20, right? It's super easy. So the same terminology works for the others. These other highs are also higher than the previous one, so you call them higher highs. All the highs which are above the first or the previous highs, they are called higher highs. So we have the same thing happening in the lower part, right? So we have here low, then another low here, but this low is higher than the first low. Let's say the first low is at $5 level, right? Then this low will be at $10. That means it's higher than 5, so we call it higher low. Because I remember when I started trading, like watching tutorials on YouTube before a few years, people like the videos, most of the time the words are like higher highs and lower highs, lower lows and higher lows. Everything is like confusing, but you don't have to be confused. Higher highs means highs which are higher than the previous one, and lower highs or higher lows, they are lows which are higher than the previous lows. Like if this is for uptrend, the same thing works for downtrend. I don't want to take time now. If it goes down, the highs will be lower. Okay, let's see. Maybe there are new traders here. So we have market which is going down like this, correction, down, goes down, correction, market continues like this. So the above points, these points which are above the market, they are called highs, right? All of them are highs. And we have also lows here, points which are below the market, they are called lows. So we have the high which is greater than all highs. Let's say this is 100 point. If this is 100 level, this will be greater than all highs. So this is high, like the first one, the previous one. So the next high will be lower than the first, so we call it lower high. And then the third one will be lower than the second one, so we call it again lower high. Again, we call the fourth one also lower high because it's lower than the previous. Super easy. And for the lows, if you take this low, let's say this is 95 level. If this point is 95 level, the second low will be at 85 maybe, right? So let's say this is 85. At this 85 level, this is lower than 95, so we call it lower low. You see, the first one is low, the second one is lower low. Then again, the third one is called lower low because it's lower than the previous one. Sorry for the connection. So it's easy. For uptrend, we follow those rules. For downtrend also, we follow the same rules. For uptrend, higher highs and higher lows. For downtrend, lower highs and lower lows. So it goes like this. If you know this one, we can straight go to the charts. We can straight go to this Bitcoin chart and we can identify the market. Look, you see this market. What is this? It's uptrend, right? Market is creating higher highs. Let me grab an arrow. So here we have, let's say this is the lowest point, right? I mean the first high. So if this is the first high, we have another highs here, right? Another high, another high, another high. Okay, I'll explain this deeply. Let's zoom in, right? Okay, so here we have the first high. Then again, after this point, if you take this level, it's at 13,797 dollars, right? Then we go to the next high, this one. So this high is at what level? You can see the price at the right bottom. It's about $14,105. Again, we have another high here. So the market is creating higher highs, right? The price is increasing. For this one, the price is around $15,800. So you continue spotting those higher points. It's super easy. Those points are the reversal points. Market goes up, then reverses. Goes up, then reverses. So the reversal points are those points which are crucial for you. You can take those points as a crucial point, like highs and lows. So we have identified our few highs. So we can again spot here another high. So we call these highs higher highs. All the highs are greater than the previous highs, so we call them higher highs. So now we can also spot lower higher lows, or maybe lows. Let's call them lows. Let me choose a color. Okay, let's go pink. The first low will be this one, right? So the first low will be this one, then the next will be this one. Again, market reverse it here. You can take this one, but it's near to the first one, so I'm gonna ignore that point. We have another low here, and we have low here, and this one is happening right now, so we cannot decide if it's low or high because we don't know where the market is going. It may continue downside. So we have spotted our lows and highs. So the yellow points, the yellow arrows, they are highs. each of them are higher highs because the market is on uptrend, and the lower points, the pink ones, they are called lows, and since the market is on uptrend, they are called higher lows. Market is going up, creating higher lows. Each of the lows are higher than the previous ones. So now we can remove all the indicators, all the drawings. It's clean, and I'm gonna remove this moving average. I will tell you what moving average I'm using for entries, for sniper entries, and for approving if the market is reversing or continuing the trend. I'm using moving average, exponential moving average, 200 period in 50. So I will show you that later. Now I'm gonna remove this. So the market is on uptrend. The first step is drawing a trend line. Since we have spotted the market which is on uptrend, the next step will be drawing trend line. So to draw trend line, you need to spot those points which the market has reversed, right? So I'm gonna draw my trend line like this, or maybe I will consider only this point above this area because it's above 12,000. There is a reason behind that, because 12,000 is a key resistance and Bitcoin broke that point. So I'm gonna take the market above 12,000, above this area. So I drew my trend line like this, connecting all those reversal points. Yeah, like this. This is for our chart. After drawing this trend line, we have spotted higher highs and higher lows. We don't have to draw those again. So let's zoom in and let's see. First, we have spotted highs and lows, right? The next one is confluence areas. Confluence areas are simply support and resistance. If you see this area, we have points where market is repeating itself. If you see this, we have a rejection, right? So we can connect those rejections together like this. So you see, I drew this rejection because market has tried to come back to this area again and again, but bounced many times. Let's go to 1 hour time frame and let's see what really happened here. Okay, you see this area, right? So this is basically a consolidating setup, Bitcoin against USDT. It has been consolidating since October 21st to October 30 before it broke out of that consolidation. So while consolidating, the market price was coming down to this yellow box and it was bouncing up. Bounced up here, again it bounced up here, bounced up here, it came, then bounced here, bounced here. So every time the market is coming to this box, market bounces. That means this area is very crucial, so you can take advantage of that area. So let me remove these trend lines and let's continue. So where are we going to take a trade? We are going to take a trade after the market decides to break this consolidation phase. If you see this bigger box, the market is inside this box. It broke out of the box, but there was no retest. It dumped here. There was a big dump here, so it decided to come back again, then consolidated for a few hours, then broke again, came back, then finally it was able to break and it tested here. If you see this point, there was rejection and it went up. This means the market is finally out of that consolidation or kangaroo phase. So we can confirm by this area because the market was able to be rejected and went up. So there was no opportunity for the market to come back to the box. Here also there is a few candlesticks, but they are open and closed outside. Again we have here, but they also got rejected. So let's ignore this consolidation phase. I will remove this box now. So now we have confirmed that the market is on uptrend, right? Because it broke upside. Now the market is outside the box and it's on uptrend. So when are we going to take advantage? When are we going to buy? If the market is in uptrend, forget about sell. Never sell a market which is on uptrend. Look for buying opportunity. So here I see an opportunity. You see this area, big rejection. This is high. Then another lower high, lower high, lower high. So I can connect these points together. Let's do it. Draw a trend line. Always after spotting those rejections, draw a trend line like this. You don't have to be perfect as always. So we drew a trend line. Now the next step is waiting for the market to break out of this trend line. After the breakout, you can immediately take a buy. Okay, so market broke out of the trend line here. You see this big candlestick indicates that there is a momentum in the market, there is a buy opportunity. So after this candlestick, this big one, remember this is 1 hour time frame. So on 1 hour time frame, we got a big bullish candlestick. It closed outside of the trend line. Remember, if the candlestick closes outside of a trend line or a box or whatever you drew, that's important sign. Price is closing outside of a box or support or resistance or trend line, that's a signal something is coming up. You have to get ready. So after this candlestick, we got ready. We are waiting for good buy opportunity. So personally, I will wait for price to give me a good setup. So the setups that I use mostly, as I told you, I consider rejections, many rejections. So I draw confluence zones, and on that confluence zone, I put a sell limit or buy limit. Sorry, let me reload this. Okay, so we have a market which broke out of a trend line, right? So now we have this small consolidation. You see this box? Market is consolidating inside this box. That means now we are good to buy. How we are going to buy? I'll show you this. I'm gonna draw rejection like this. I'm gonna draw a rejection area, a box like this, because those rejections 1 2 3 4 5 6, all these rejections, they are a good sign of a market reversal. Market is already out of a trend line. Now we are good to buy, right? So I will put a buy limit here, or if I am there, I will buy at this same level. Then I'll put remember, this is cryptocurrency, so everything, take profit, stop loss, everything works by percentage. So I'll measure a percentage down here for my stop loss. If I'm using 5% stop loss, most of the time I use 5%, so I'm gonna put my stop loss down here. This is 4.7, 4.8, 4.9. So at this level, I'm going to put my stop loss. Yeah, so below these rejections, I'm gonna put my stop loss like this. So if we measure this, if we buy here, our stop loss is at 3.95. So that's good. If you invest $100 on 5 times leverage, that would be only $15 loss. So I'm in here, either here or either here. There is a big dump here, it's okay because my stop loss is down below there. So after this, the market went crazy bullish here. Look, we entered here, right? So if you measure all these points, that's about that's about 15%. Okay, actually I'll put this one long position. I buy here. My target will be as I told you, everything's in percent, right? So I target most of the time 10%, for Bitcoin, you have to know the market is volatile and it moves like few percents because it's a big market. So if it moves 5% in 2 or 3 days, that's a big move. If it moves 10%, that's also a big move. So I will target 10% here. That's 10.88. So I'm gonna put my take profit here and my stop loss, yeah, exactly at that point. So this red area is a stop loss if the market goes down. You know this, I think. This green area is a take profit or the profit part. So my target will be at 10.88. So as I targeted my my profit hit and I'm out with 10% profit. That's it. So we got one win. After this, we wait for another opportunity, right? We are still on a bullish market, so we wait for market to give us another buy opportunity, right? So let's see if we have a buy opportunity. You don't have to sell a bullish market, okay? Maybe sometimes if you are targeting few profits, it's okay, but for long term or for hours, if you're trading for hours, you don't have to sell a bullish market or market which is on uptrend. Okay, I'm gonna remove these lines. So now the market is creating these points. That means the area where our trend has been drawn. So as soon as the market reaches this trend line, it gets rejected, but we don't have to trade that area because we don't know if the market is going to break or retest. So let's go to 4 hour and let's see if we have another good setup. Sorry, I've got cold, my voice is okay. Let's see. Yeah, on 4 hour it looks like this. So I see big rejections here. Market is trying to go up, gets rejected, tries to go up, gets rejected, a big dump here, then goes up, a big another dump here. Then this means this area is a good area. We have to focus, so focus on that point, draw a box, easy. Spot a point where market has been rejected many times, draw a box, we have a trend line, wait for the market to break out of that box. So finally the market broke out at this area, right? So immediately after breaking out, we are not gonna take a trade, so we want a retest. We want a retest or something like many rejections as we have seen on this area. After we got 4 or 5 rejections here, we took a trade, right? So let's see if we have opportunity to take this trade. So exactly at the trend line area at this point, actually at the trend line and at the box, this is a confluence zone. At this high tension area, market is consolidating. You see this box? At this box sorry so at this box, market has been consolidating. We have around 9 candlesticks on 4 hours. That's about the whole day, more than one day. So more than one day the market has been consolidating inside this box. So at this area we have opportunity, so we take opportunity going to lower time frame. For sniper entries, in fact, I go to lower time frames, like sometimes I go to 1 minute even for super sniper entry. But let's see one hour only for this tutorial. Now market is here getting rejected. Let me show you. We have rejection here, we have a big rejection here, then the last one here. So after these 2 rejections, definitely I'm gonna put a buy limit here. Put a buy limit, or if you are there, oh sorry, so this yellow line will be my my buy limit. I'm gonna remove these arrows. So you see this area, right? So you put a buy limit here and you're immediately in. If you are scared that the market may leave you behind, you can put buy limit just above this box to get in early. So you took early entry here, so put your stop loss by measuring the percentage, or you like calculate the equity you have. Calculate the equity, the margin you are using, or the leverage you are using. After that, put your stop loss according to that. Most of the time, the trouble which is we are facing in our group is there are people who are trading small accounts, very small accounts, like $10, $20, and there are also some people who are trading thousands of dollars, right? So for those, I give a stop loss comparing all those, like average stop loss, a good area, like below rejections, like depending on the price action, right? So plus the price action, you have to consider your equity. You don't have to take my stop loss directly. Sometimes the stop loss I give is maybe like far from the entry. That may kick you out if you have a very small account. So if you have a very small account, have your own goal. So let's say if I lose $5 and I target $10, that's my plan. If that is your plan, put your stop loss at $5 only. I know sometimes market kicks you out, then goes in the direction that you have predicted. But you have to consider this one. I mean, I'm not saying always put $5 or $10 stop loss, but consider, calculate your equity, calculate your margin. So I did a buy limit here. If we measure this, the market went up in our favor 5%, 6%. It actually went up more than that. If I am targeting $10 profit, if I am targeting $10 profit, I mean, sorry, 10% profit, it will be at this area. This is the strategy I use. I follow my plans. I go to higher time frames. I analyze the market. I go to lower time frames to take sniper entries. I had a plan to show you some other coins. I have favorite coins here, all of them. I was able to show you sushi and ZEC also, but now we took 32 minutes, so I'll be back on the part 3 video.